What do you see as the key moment now in the industry? Is it looking better, or are people still feeling that they're still trying to get over the problems of the first quarter?
That's a simple question, and I'll try to keep the answer simple, even though it's not simple at all. It's quite a long value chain. There's different stages, and this tsunami has hit it at different points in time. Clearly cells and modules began towards the beginning of the year and accelerated with Italy. Wafers has sort of happened about in the last month, and I think the equipment companies are standing on the beach, seeing that big wave coming, and are starting to run for cover. So depending on where you are in the value chain, you've been seeing it at different points in time, both from a volume perspective and from an ASP perspective. We think that, generally for the industry, Q2 will be very bad, and for parts of the industry, Q3 will be very bad as well. But volumes have improved, and we think they'll continue to improve month on month. But you're in a point now where people are waiting to see, will ASPs fall any more, and if they think they will, then they'll wait a bit longer, and if they don't, then they'll start buying. So June, July could be a very critical period, certainly for cells and modules, and then wafers and poly and equipment will follow them with several months of delay. Sorry for that long answer, but it's not a simple one.
Well, you mentioned in there about the declining prices. Some people have said that we could see overall module price declines of 20%. Could we see more or less of that?
Yeah, well, hard to get an accurate picture on where prices are. I think coming out of last year, modules were generally between 150 to 160 euros per watt. In March, you were starting to hear 110 per watt quotes, and now 1 to 105 is sort of close to the mainstream for certainly tier 1 Chinese companies. So that's 30-ish% decline. That's the severity of it. And one of the things I've learned today is that wafer prices have fallen even more on a percentage basis, because they increased last year about 20%, so they have to give back that 20% plus catch up with the 30% drop in modules and cell price.
Is that being helped though by the falling prices with polysilicon, or are we still not seeing the polysilicon price really come down to where people were perhaps expecting only a year ago due to the increased capacity coming online, especially in Asia?
Yeah, polysilicon is sold on a sort of spot market and a contract market, and depending on the time period, spot can represent 10 to 20% of the total. So most of the market is based on contracts, and contracts have been between, say, 60 to 40 euros. 45 to $65 per kilo. And that's edging down a bit, but contract price hasn't changed an awful lot, and therefore, given the weight of contract in the total, the blended price of poly hasn't fallen that much, maybe 5-10%. So that big drop in wafers through modules is not really reflecting any change in poly prices. It's just more supply-demand specifically in those product categories.
So we shouldn't expect a serious crash in polysilicon prices on the spot because of this overall long-term contract perspective, or what? Because it seems to be very difficult.
Spot will do what it does, and prices have fallen from this most recent cycle, $90-ish to 55, maybe even 50 now per kilo. So they have fallen a decent amount. Contract prices haven't really changed much, and there are some people trying to renegotiate certain contracts which were signed maybe in 2008 when poly contract prices were high. But the prices of a company like Wacker has long-term contracts of maybe $50, $55 a kilo, and those don't seem to be really under renegotiation at the moment.
One final question for you. What's still your expectation from a megawatt or gigawatt installation perspective this year, given the volatility we've seen?
It's particularly hard because when prices are changing very quickly, all else being the same, it is very positive for volumes. The net effect on the company will be negative, but and prices have fallen a lot more than even we expected, and we were quite bearish. Our formal forecast remains 17.5 gig this year. It's possible that could be 20-21 gig, but it's really now would need to be a sort of 65-ish% of volumes in the second half of the year to get there. So you're going to need to see the shift we touched on earlier on. June, July, are you seeing an inflection point? That needs to kick in quite soon, or you're just not going to get the degree of improvement in the second half. But we're definitely comfortable with 17.5. 2021 is a scenario, and in a month or two we'll see whether that's a realistic scenario or not. So.